Hello, this is Kevin Prince from BMO Exchange Traded Funds, and thank you once more for joining us on the Market Insights webinar. Each week, we try to provide you some net new insights to the overall marketplace itself, and specifically around exchange traded funds and investing for you. Now, each week, you also provide us some questions, and that really helps drive our content. So I'm going to thank everyone who's taken the time to give us some questions this week, because it really helps give us direction where we're going to go with our content. So with that, let's get into it. Before I get into it, what I want to do is I want to get to my disclaimers. Really, in the disclaimer-wise, I want to highlight, we're not going to give advice here. We're not going to give individual recommendations, but we do want to provide you some education and insights to help you invest yourself. With that, let's get in and talk about the guests for today. Now, first, I'm going to start with Aaron Allen. Aaron, you've been with us before. Thanks for coming back. Appreciate you joining us one more time. Net new, Nelanie, thank you for joining us. Now, very special guest here, because Nelanie comes from a group within BMO Global Asset Management that is Responsible Investment Overlay, our advocacy team, about a team of around 20 to 25 people. This focus specifically on advocacy, and we're going to talk to you today about advocacy that is happening within products like our ETFs. And with that, let's get into this. Before I do, I want to go to Aaron, and I want to say, Aaron, we know we're hearing a lot about ESG in the marketplace. We're hearing a lot about social responsible investing. Why are we hearing that so much these days?
Yeah, thanks, Kevin, and thanks everyone for joining us today. I think the truth is that we can really no longer ignore the sustainability challenges that we're seeing in the world today. It would just be irresponsible to do so. And one thing's for certain, and that's that the future doesn't look anything like our past. So whether it's forest fires in the west in the summer months or increasingly destructive storms to the east, we're facing all kinds of issues, both environmental and social. So a connection has to be made between the real world and our investments. And responsible investing is growing so rapidly because investors are really looking to align their investments with their values. They're beginning to see that from a return perspective, you don't have to give up returns to invest responsibly. And they're becoming more educated on the benefits of this approach and seeing more and more how I think ESG issues can have a huge impact on a company's success. And they're beginning to take that to heart in terms of their investments. From a product perspective, we've seen a huge increase in ESG solutions over the past 3 years on a global scale in passively managed sustainable investment products like our ETFs. We've seen assets double, and we've also seen the number of products double. So it's just a huge area of growth.
Well, thanks for that, Aaron. And one thing we always like to highlight in this webinar series is tools in the marketplace. I know BMO just launched one recently in regards towards ESG. Maybe you can talk to us about that, please.
Sure, yeah, so this is exciting. We just launched this week. And really, we're trying to recognize that we all approach that intersection of our beliefs and our investments in a different way. Some of us are more skeptical. We want to see the facts. We want to see the returns. While some of us are more diehard ESG supporters. Maybe we're more concerned with the impacts our investments can have around different ESG themes. So we've created this tool or survey. It takes 2 minutes to complete. It's only 6 questions long, and it helps you recognize and understand your approach to investing and what you value around ESG. So you'll find out if you fall into one of 4 buckets: the ESG motivated, ready, pragmatic, or skeptical bucket of investors, and how strong your ESG beliefs are, what you value when it comes to your investments.
Well, thanks, Aaron. And I think it's a great new addition of tool to really help people understand where they fit inside that paradigm and get the journey started. Now, Nellie, let me bring you into this because, I said the word ESG a few times. Maybe it's not a word acronym, I guess, a few times. Can you walk us through, when we talk about ESG or specifically responsible investing, what are we really talking about?
Yeah, absolutely. Thanks for having me here today. And I think I'll just take a quick step back to really put this all into context. So responsible investment is really the umbrella term slash approach for this space that really encompasses all the different ways that it can be implemented. So to go by the definition that you see on the slide, it is specifically an approach to investing that aims to incorporate environmental, social, and governance, which is your ESG, considerations into the investment decision-making process to really generate sustainable long-term returns. Effectively, ESG factors impact the performance of investee companies over the long term. And we would argue that investors that do not incorporate these factors into the investment decision-making process could be actually doing a disservice for their clients. I know it sounds simple enough, but in practice, this idea can get quite complex once implemented.
Yeah, I agree. It is a complicated. Looking forward to diving a little bit into today, but I want to flip gears here because, Aaron mentioned off the bat some products in the space that kind of focus in on investing through ESG. But I want to talk about the other side if we can. That's why you really know your expertise is really appreciated. Let's talk about the advocacy side of ESG. Bear with me. And we're talking about engagement and proxy voting through active ownership. Now, what is active ownership, if you could educate us on that?
Absolutely, really great question. So most mainstream investors aren't familiar with this term active ownership, but it really is a key lever to being a quote unquote responsible investor. In short, active ownership is a practice of actually exercising your shareholder rights to improve the ESG business practices of the investee companies that you're invested in. So when you take a look at this slide, what we're outlining here is the two mechanisms to be quote unquote a active owner. So the first one is the practice of engagement. Is your investment manager engaging in dialogue with investee companies on ESG risks? This interaction really does move the needle in terms of encouraging sustainable long-term performance. And so I'll be walking through an example later to really bring what an engagement situation looks like to life. The second mechanism that we use as investment managers is around proxy voting. This is an age-old practice used long before this whole space of responsible investment came to the fore. But what's important to understand today is how your investment managers are voting or advocating on your behalf with regards to shareholder proxies. Do they blindly side with management recommendations, or are they actually voting on shareholder resolutions that actually advance how companies address ESG risks that are actually material to their long-term performance?
I think you're right, and that is a key consideration. You start to think behind the scenes what active ownership is. Now, interesting to highlight that active ownership is being applied to all products at BMO, Global Asset Management, for our funds and our ETFs. And we've been doing it for 20 odd years, but maybe you can talk to us, Nalini, a bit. What's been going on the last 20 years? How's the industry changed and evolved over those 20 years in regards towards advocacy?
Absolutely. And so this is really where my work, gets super exciting because, one question we get from those pragmatic and skeptical investors is, does this really make a difference? And when I talk through what engagement dialogue looked like 20 years ago, and when you hear how far we've come along, I think you're going to actually feel really empowered and motivated to know that having an active ownership program attached to your investments is super key to kind of the future of investing. And so if we start on the left side of the slide, 20 years ago, engagement was largely focused on disclosure. So what does that mean? If we think about an issue like climate change, which is a key environmental issue, we would be asking companies to actually measure and disclose on their CO2 emissions because it was really hard to find information on how their businesses were impacting these emissions. The focus today, though, is much more on strategy. We've had so much advancement in this space on companies disclosing their CO2 emissions and their environmental practices. Now we're saying, well, great, we've got the numbers, you're clearly monitoring this, but what are you actually doing about it? And particularly at the board level, what's your strategy for really material ESG issues that you face? How are you incorporating that into your core business strategy? So if you take climate change, for example, what is it that you're doing in regards to your R&D efforts, your CapEx, the way you actually interact with your customers? It's become a much more strategic discussion. If we move along the slide, 20 years ago, we were talking to CSR experts, so corporate sustainability experts at companies, very mid-level management. And we were talking to them specifically about sustainability because that was what their whole role encompassed. Today, with that more strategic focus that I described, we're trying to engage again at a board level. We think that ESG issues deserve recognition at the management and board level. Now, I will say, and I'm happy to come back to this later, that it is a lot easier in some markets more than others. And for example, in the Canadian market, we do have very regular interactions with board members of investee companies. In other markets, maybe if you think about the Asian markets, sometimes it's a little bit more challenging to get that direct interaction. So 20 years ago, engagement on ESG issues was very much a niche approach to being a responsible investor. It was not very common. Today, we're part of multi-trillion-dollar collaborations. What does that mean? It means investment managers around the world are banding together to use their collective positions in investee companies to demand more actions. So for example, the biggest collaboration at the moment is one called Climate Action 100+. They represent $35 trillion of assets. And while it's the largest, there are many others. And it is not unusual to get together multi-trillion dollars worth of assets to really throw a lot of weight behind the engagement that we're doing with investee companies so we can have a lot more clout in the results that they're achieving. Finally, 20 years ago, companies were just quite unwilling to engage in dialogue with investors. So there was a certain amount of suspicion. There was a lack of resource maybe on the corporate side to engage with investors on responsible investment issues. It was often quite a push to actually get through the door and have a conversation. Today, companies are much more open to hearing our views. Often we approach companies to talk about ESG. They're very happy to hear from us because they actually want to know what are the best practices in their industry that they might be missing. And they want to know where they should start prioritizing.
That's some good insight with transition over the many years. Maybe we'll take one step and dive in a little bit deeper and talk about active ownership, because you and your team operate globally. And in looking at various engagement themes, talk to us what's involved in this active ownership in a little more detail. And I know you have an example too to walk us through.
Yeah, exactly. For us at BMO GAM, there are 7 overarching themes that you could see on that color wheel on the slide that we focus on, which capture most of what we perceive to be ESG risks. So these themes include environmental standards, business conduct, human rights, labor standards, public health, corporate governance, and climate change. And to bring this to life, I'd like to walk you through one specific engagement example that you mentioned, Kevin, if you don't mind flipping to the next slide. Perfect.
Great.
So this is probably a very familiar sight for most of you on the call. I imagine most of you have one of these in your front hallway as we speak right now. So my example is talking about our engagement with the company Amazon. They have really defined how retail looks and feels today. They had a market capitalization of around 50 billion 10 years ago. They're now worth well over 800 billion, and it's one of the largest companies in the world. With that growth comes enormous power. And so we want to know how Amazon has stepped up to take responsibility. Next slide. So this is Amazon's headquarters in Seattle, where about 45,000 people work. They have 3 biodomes, which you can see here. They have a Harry Potter library, a video game lab, and even a dozen independent coffee roasters on site. They have a bring your dog to work policy and, a lot of basically perks that would make you think that from a labor standards perspective, there are not many concerns. But this is not where our concerns lie. This is where our concerns lie. What we've been looking into is how the staff who work at an Amazon fulfillment center is being treated. There's a lot of staff required to process the number of orders that Amazon get on a daily basis and get them out for delivery. There have been allegations in the media of working standard breaches within these warehouses and of the delivery timelines that drivers are faced in terms of the unachievable schedules. The company obviously denies these allegations, So we can't exactly say where the truth lies. But what have we done about it as investors in this company? Slide, please. We started talking to Amazon. So our interaction with Amazon, the dialogue that we describe as engagement, you can see at the bottom half of the slide. That engagement started in 2011 as we were concerned with both environmental and labor issues. So in 2013, we co-filed a shareholder resolution on the annual general meeting agenda to ask for better ESG and climate change reporting. So that goes back to disclosure. In 2014, we did get an agreement from the company to improve its reporting, and we were pleased that they appointed a new head of sustainability. So with limited success over the years, we spoke with other asset managers to join us in pushing the company to do a little bit more. Now there's about $2 trillion of assets represented in the group in which we're engaging with Amazon, and we're really looking to push the case of labor management. In the last couple of years, we've gotten some positive news in terms of minimum wages in both the UK and the US market being increased, along with a net zero carbon target for 2050. But we're still not getting the pace of change that we'd hoped for. We've not given up and are still continuing to engage the company, but I think this illustration really brings to life the impact that investors can have by engaging with investing companies. Slide.
Yeah, so I mean, that's a great example coming in on Amazon, and that really gives us a snapshot of the dialogue that you're having with companies on a regular basis. And actually, a lot of people are probably amazed right now that this kind of conversation is going on between a company like BMO and your team dedicated around advocacy and those companies out there. But I know your team has been working on this stuff for the past 20 years. So do me a favor, talk about some of the things you're proud about and some of the things, your milestones that we can really acknowledge from that work over all those years.
Absolutely. So I think the main point that I'd like to underscore here is that, action and reaction does not happen overnight. So we can take action to engage investee companies to really push and try to influence by using our shareholder voices some changes that we think will lead to sustainable long-term performance. But it does take time, like you saw in that Amazon example. And because we've been at this for 20 years, we're quite proud of the achievements that we've been able to make over that amount of time that we've invested in this advocacy work. So for example, our coverage in terms of engaging with investee companies has really expanded, and we're now covering 87 countries worldwide in terms of where companies are sitting and who we're talking to. We've actually recorded close to 4,000 instances of positive change in 20 years. So if you think back to that Amazon example, that would be their hiring of a dedicated sustainability person, their increasing of minimum wage of their workforce in both the UK and the US, and then their commitment to a net zero target by 2050. So we have close to 4,000 instances of those types of changes over the 20 years that we've been at this. And then finally, I'll point out one stat that we're really proud of as it relates to climate risk is that 468 companies have actually improved their approach to managing climate risk. They've become much more resilient. As you know, there are some really tough milestones kind of looming upon us from what we hear from the UN about when the effects of climate change become irreversible, that these are really going to start making their ways into our investment portfolios. So we're really excited to see how many companies have really stepped up to become more resilient to these milestones.
Well, thanks for that. And I couldn't be more proud of you and your team and the efforts you've been making, not just for me as an investor, but for everybody out there in helping companies maybe become a little bit better year over year over year. And it certainly is making a difference. And I can see it through the milestones, and thank you for sharing that. And what I do highlight too is that Melanie's talking about too here is not related to a specific product. When you talk about advocacy, it's all the products across BMO, and other companies do this too, to be fair. In addition, I do want to highlight that it doesn't cost additional. This is all part of what the services through the specific products are. Now, Aaron, let me bring you into the conversation for a bit here too, because what I want to highlight here is that you can look at the advocacy and the activities of other people out there in the marketplace, their proxy voting, the whole works. Talk to us a little bit about where people can find information. This is a recent study that came out in the publication. Hats off to Pure Investing for putting that together. Maybe you can talk about where people can find information on the other companies out there that are voting proxies and what their efforts are.
Yeah, so anybody can go to the UNPRI website. If you just Google UNPRI, it'll come up. And you can actually pull up the signatory profile of any company. So you can search for BlackRock, BMO, Vanguard, you name it. And what it's going to show is all of the voting data. So what percentage of the proxies have been voted on? How many votes were thrown away and why? How many were voted against management? And that kind of brings me to what we've shown here, where we show a snapshot of us versus our peers, showing how often we vote against management. And you can see that we do it a lot more than our peers. And what we're really trying to show here is that we're not just blindly voting in line with management. We're really trying to influence and change behaviors of these companies. I'll also note that we were awarded by PRI an A+ on our commitment to active ownership, strategy, and governance. So you can see that this obviously is an area that we're really focused on. And if you go to the next slide, Kevin, at BMO, we have full transparency into our proxy voting. So you can actually go to our website. If you go under legal and regulatory, there's a proxy voting dashboard there where you can get granular on a specific ETFs or specific companies if you want to see the voting action behind the scenes. So that's another good tool at GAM that you can go to look at.
Yeah, I think it's good to also see the proof points too, and it's good to have the tools that show the transparency, and that's been something key to ETFs. I will highlight you can also get the transparency in all the mutual funds too. So again, I mentioned it's all the products at no additional cost. Aaron, quickly talk to us about some of the products that are dedicated towards specifically the ESG theme. Again, all products offer advocacy, but some products are focused specifically in the theme.
Yeah, so this year we did launch a suite of 8 ESG ETFs. So 4 broad market equities. We launched Canadian, US, EFI, and Global, and they all track the MSCI ESG Leaders Index. And I'll just note this index is very well recognized. It's often used as an investment policy benchmark for large asset owners and pensions. So one of the leading indexes. We've also launched 2 fixed income ETFs, Canadian corporate and US corporate bonds. Tracking a Bloomberg Barclays MSCI index with similar rules to the Leaders Index, though there are slight differences. So these ETFs are all broad market based. You're going to see all the sectors represented. You're going to see an energy weight in them, for example. And what they do is they aim to invest in the top 50% ESG rated companies in each of their respective sectors. So these are a great solution for those of you who are looking to align your values with your investments. 2 other options that I'll just mention here. We launched ZESG, our balanced ESG ETF. So this is an asset allocation product, 60-40 asset mix, investing in a diversified portfolio of fixed income and equity ETFs, all in a one-ticket solution. And our BMO Global High Dividend Covered Call ETF. And that takes a basket of high dividend paying companies selected using an ESG screen. And writes covered calls on the portfolio in order to generate that higher income. You probably have heard about our covered calls on this webinar a couple times before. Lastly, I mentioned where you can find a full list of RI products that are available in Canada. We've included a link there for you, so you can go and search that for anything that you might be looking for.
And that's all products beyond BMO products. That's a complete list of products focused in on the theme of responsible investing specifically, and then you can have ESG within inside that on their website. And what I do like about what you can now do through ESG, specifically products like this, is you can build a portfolio however you want, whether you have more equities, more US, or more fixed income, or even an income theme itself. You can now do that, but still stay within inside the aspect of environmental, social, and governance. Thank you, Nalini, for your insights. Really appreciate hearing about active ownership and what we've been doing from a BMO perspective and your teams. And I think that's probably new insights for everybody out there to think about what companies are doing with their securities and how they're voting across the board. Let's shift gears here and let's jump into some questions. I'm going to say, let's start off with a question first of all for Nalini in regards towards responsible investing. Where can somebody learn more about this?
Yeah, absolutely. It's a really great question. So one thing that is great about this space and how it's taken off is that in each region, globally, if you will, there is what you call the Sustainable Investment Forum. So a non-for-profit association that's really dedicated to furthering education in responsible investing. And so right here in Canada, we have the Responsible Investment Association, RIA, they are known as. Therefore, kind of all types of investors, from individual investors to advisors to institutional investors. And so if you go to their website, there's a lot of great information on not only responsible investing from an educational perspective, but also they can give you some insight into trends and how the industry is progressing. And they actually have some courses that individuals can take to kind of come up to speed on this space on their own time through their own computer. The second resource I'll mention, Aaron previously touched upon them, is the UNPRI, the UN Supported Principles for Responsible Investing. They're the largest global association dedicated to this space, and they also have a lot of great tools for understanding how responsible investment is actually implemented from an investor's perspective. So in addition to active ownership, which they cover in depth, that we discussed here today, you can read a little bit more about things like ESG integration or impact investing, some of these terms that you may have heard of but are not super familiar with. And then finally, as Aaron and Kevin have both mentioned, we do a ton of work on this space and have some great thought leadership right on our website.
Thank you for that. Aaron, let me bring you for a couple of questions here too. First and foremost, ZedPay is certainly popular as a discussion on this forum, and we've had some webinars in the past. Individual here is looking to, how is this dividend calculated? And volatility is moving up and down, so that's your premium. If that's moving up and down, how are you paying this dividend on a regular basis? Can you walk us through that there, Aaron?
Sure. So when it comes to the monthly distribution, we're going to look at that every single month for a product like ZedPay. We review the amount to ensure that it's really in line with what the portfolio is earning. We don't want to be overpaying or underpaying. And I will just note for ZedPay that the dividend would actually be a combination of dividends and income. So that distribution you're getting is a combination of those two. So as I said, we're really trying to keep it consistent so investors aren't seeing a huge increase or decrease month by month. If there is a prolonged decrease in yield in the portfolio, we will decrease that distribution so that we're not overpaying. So it's definitely something that we look at every month. We do have a previous market insights where we went into great detail around the yield for ZedPay as well. So if you're interested in learning more, I would check that out too. Thanks,
Aaron. I'm going to stay with you for another question here. This is in regards towards currency. I had a conversation a few weeks ago about our US equity. Maybe you can give us some concepts or go over the concept again of currency inside these ETFs, please. Currency hedging, that is.
Sure. Good question. So I always think about currency hedging as sort of being like insurance when you get it to protect yourself from an unforeseen event, right? So in this case, volatility in currency. So hedging really helps to reduce the effects of currency fluctuations in that rate of exchange on the value of your investments. If you want to keep it simple, going with a hedged position is definitely the simplest approach. But like, let's say you have a position of Apple. Apple is listed in the US. So you not only have a position in Apple, but you also have a position in US dollars because it's US listed. So what we do to actually hedge that portfolio is short that US exposure to effectively remove that currency risk. So again, as I mentioned, to keep it simple, hedge. If you have a view on currency and you think it's going to move in a particular direction, we provide the tools where you can actually build your portfolio around that. So we have hedged, unhedged US dollar solutions, so you can access it any way you want. It is important to note that that impact of currency movements tends to diminish over time. So if you're looking to invest in a short term, over the shorter term, maybe more prudent to hedge. Whereas if you're looking at a longer term horizon, that those currency movements will have less volatility.
Thanks for that, Aaron, and definitely insightful. I think, one of the nice big advancements inside exchange traded funds was a currency hedged ETF, and another Canadian advancement in the marketplace. So good to hear the insights around that. One more question for you there too, Aaron, and I think you got a slide for this too, is somebody's looking to our website, and thank you for going to our BMOETFs.com website. And inside that website, can you help us find, where the Canadian equities or the US equities are, or the global markets are? And I think you got a quick tip to share with everybody too.
Yeah, so we've created our product roadmap, and it's linked on our website. So if you go to BMOETFs.com, just under or just above where the products are listed, you'll see a link to the roadmap. And what we've done is really created kind of a visual, so you can see the documents laid out with equities and fixed income. And then within equities, we break it down by Canada, US, and international. So you can see everything there. There's a lot to choose from, but hopefully that makes it more simple for you.
Well, I also like you put hypertext links in it too. So when I find something I like, I can dive into it. So I think that's a nice advancement for the modern world we all live in. Well, Aaron, thank you too for your participation today. And one more time, thank you to you, Melanie. I'm going to say we're going to close off for today, but please send your questions for next week. Let me give you a quick snapshot for next week's session. Next week's session, we're going to dive into technical analysis. We're going to have Alfred Lee. He's a CMT, which is a chartered market technician, and he's going to walk you through some key indicators and some key considerations when you're looking at those indicators in regards towards ETFs. Hope you can join us next week, Friday, December 11th at 1 p.m. Look forward to talking to you then. Cheers.